Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here to share with you once again, a quick update about what was the most important topics, news, events, corporative events, global macro events happened during the last week. If you are watching this video, it's because you're actually following what we do every single week to give you the recap of the last seasons for the markets, right? Let's start sharing the screen and go into more details. I think we should start reviewing the week, checking the earnings and the calendar of the earnings, and obviously we're gonna go to see one of the most important things, NVIDIA results. Have you seen the video we did in relation with NVIDIA? Explaining the fundamental report I was doing for you, published here in this channel, giving to you the key points for the company. For example, low leverage, super strong ratio between assets and liabilities, so good numbers, and also the evolution of the company in long term. It was obvious that it was strong, but the gap generated by the results, it was massive. It was super good numbers, super good results. Let me actually open here another tab so we can also see in detail how big it was, the gap caused by the earnings on this company, which it was again amazing. NVIDIA, here we go. And if we go to earnings, you will see a positive gap caused by 72 cents actually. Higher than expected. So amazing results, and actually the effect of NVIDIA on the global market was actually so positive. You can see that since that results, not only Nasdaq but also SP 500 was rising strongly. Even Nikkei was breaking up new maximums, new records. European market was also rising too. So it has caused a kind of boost effect on the equity around the world. We have seen that for the last 2-3 years since COVID. Technological sector was actually one of the strongest sectors. The evolution was so positive and good and strong. But as you know, if you follow these videos, one of the sectors I have been talking and sharing with you is the energy sector. Why? Because it's one of the sectors with highly discount, considering the situation of oil price right now, the last couple of months, which has been lower and lower, and therefore giving to you certain companies related with gas and oil industry super low prices. One of the cases, it was Egon, which it's one of the ones that it was publishing this week results. Where it is, let's check on it. EOG, you got it here. And as you can see, the estimate EPS, it was $3.08. The current one, it was 3.07, so it was lower than expected, and still is one of the companies. Let me open the chart so you will see what I want to explain in this case. If we go to a kind of long-term view, even weekly if you want, we will see that this stock has been doing kind of lateral movements since the half of the last year. And why I find this interesting? Because of this. If you see, these are kind of runs that is forming right now on the prices on this stock, and you can see that the main challenge is just the 50% of the range, which is $123, $124 per share. But again, if it's dropping, the case is probably strong supports in around $100, and still certain bullish trend here. For all of these reasons, if you take a look on EOG, which is again one of the companies who this week has published results and lower than expected, if you compare this one with the one I have been sharing with you the previous weeks, which is ExxonMobil, you will see that actually it's very similar pattern. ExxonMobil was actually touching $96, $98 per share in a range or channel of $120 stop, which is very, very ambitious trade to hold on your portfolio these stocks and wait certain movements to take the prices back to the top of the range, which is $120, will be an amazing $20 per share of profit. So good ratio, risk reward. get out if it's dropping this one. And remember, this is not advice of any kind. This video is not designed to tell to you what to do with your money, because we are not providing any kind of service or financial advice. And if you are considering to invest, you should first contact your financial advisor in any case. Still, I'm sharing with you this information. I'm sharing with you my view, my personal view on this stock. As you can see, energy sector to me is one of the main sectors. Now, going to the global markets and what happens during the week, apart of NVIDIA effect, which has been kind of refreshing effect on the market, we also going to take a look to the calendar, to the most global news that I will say that after NVIDIA effect, the second biggest effect and most important one is the Federal Reserve perception and the Central Bank of Europe, because both big, massive central banks is the ones who are, I will say, making up the trend on the market. They are the ones who are creating the trend on the market. Any negative word from Federal Reserve could turn the market down. Any positive words from Federal Reserve could actually push the market up, like it did in back in December last year when Jerome Powell announced the considerations to cut interest rate by March. By the way, the perception right now, I have been sharing with you certain comments, like always, every single morning in our blog, the one you can see here, this blog, ATFX Connect blog. You can read there every morning the last updates, the last comments related with European market, US market, and China and Asian market. So I mentioned, I also share with you reference about Nasdaq, Japanese stocks exchange, Japanese market mainly, Chinese economy and Chinese market, which is Hang Seng, and also Shanghai Composite. I have been following those markets for the last few weeks closely, because from the Chinese side, we have been hearing many different topics, many different news announcements from Popular Bank of China, cutting the interest rates, referential interest rates, giving flexibility to the real estate sector, because it's one of the main concerns of the financial markets in China right now. So all of these things has been explained in detail on the reports I share with you every morning. But let's go into details. I will highlight for you, for example, the comments from ECB this morning, Central Bank of Europe. We can read here, well, the ECB, let me share the screen with you so you can see all in detail. The ECB stated that while inflation dropped quickly last year and is currently just under 3%, it may take more than a year to reach 2% target. Pay attention to this, please. While ECB estimate for the next 3 years stayed constant at 2.5%, the median expectation for inflation over the following 12 months increased to 3.3% in January from 3.2% in February. So, my friends, all followers from this channel, bad news. Central Bank of Europe is increasing the expectation for inflation for the next 12 months, which is exactly more or less in line with what was this. I think these points, these conclusions are coming from the last meeting from the Central Bank of Europe. Even the ones from the Federal Reserve that you're gonna read a few lines below are saying almost the same things, the same concerns. They actually are worried about the inflation can actually rise back again, and because of that, the expectation for interest rate cuts in March are getting moving forward and forward and forward. Which means, translated to those ones who are trading or trade on markets but are not really familiar with macroeconomics, or they are just amateurs in the trading industry, this could translate as a lower expectation of interest rate cuts means less flexibility, less liquidity in the market, less facilities from financial authorities, monetary authorities, to give more gas on the market, and therefore the market drops. Now, what happens right now is market is still celebrating the fact of NVIDIA on the stock exchange, mainly in the United States, but it's moving absolutely everything, not only tech, it's moving also industry, energy, all. If you check the sectors, are all of them rising. Let me share with you also the sectors. You will see all of them are rising, are positive for the last month. The performance is amazing. Even energy sector, with the oil price still low, is 7.53% up. The ATFX LE, composed mainly by like 20-30 oil gas companies. Communications, industry, financial services, healthcare, basic, And technology, surprisingly, is 2.35% up because it's the strongest one. But rest of the stocks are still rising. One important thing or one important topic, I will bring your attention to the dollar index, because the dollar index is actually moving in a kind of 1, 2, 3, 4, 5 new. Let me delete this and I will show you more clearly what I mean. It's moving to a new bullish pattern composed by let's grab the 1, 2, 3, 4, 5, what it could be. Shoulder head short inverted, and the projection of this actually could deliver to you to boom, a new top level. Let's say here, when the neckline is truly breaking up. Yeah, it could move the price to certain levels that call it if you want a coincidence, but it's giving to you actually the targets of the lost tops getting in the market last year, which is 108, between 650 to 108 points on dollar index. If this happens, if this actually move forward and happens, we will see the euro dollar dropping, so losing the 55.22 200 moving average, moving below the resistance. And if you can see also, these candles are still drawing us a super area of selling right there, as you can see. And therefore, if continue the movement down, is actually one of the reasons I believe we can even see somehow 105 sooner or later. So follow closely the dollar, because it's very interesting the evolution it's taking. Bitcoin is taking a break, but still full of supports. So super bullish asset since last year, not only now, but even 2023 was amazing year for Bitcoin. Is doing really well. European market, I think I already mentioned it. It was reacting super positively to the effect of the NVIDIA results. Also, what else? We got Nikkei. We also mentioned that positive effect on Nikkei. SP 500, again, breaking up new maximums, new records. We also got Russell 2000. It's still there. It's not moving forward, which is interesting because Russell 2000, once again, it represents more realistically how is the situation of business in the United States, because it's composed by small middle caps, and therefore the ones that actually need to face the economic troubles daily. You can see Nasdaq is actually not celebrating so much because it was already discounted super high and strong, and therefore we need to see if Nasdaq is actually consolidating the movement. Last season was so good, it was recovering mostly all losses for the previous days after the results of NVIDIA. It was a party in Nasdaq and it was rising, but still I won't say that it's actually going so far. We can see that it's facing 18,000 points like a kind of top resistance, so we should keep an eye on that. I think that's all. In general terms, I mentioned what was the main topic to discuss, which is the central bank's policies and positions for this week. The most important events we have seen, it was the speech from Bank of England. The labor market in United States was so good yesterday too. What it is? Let me check. Jobless claims 1.86. 1.86 compared with 1.88 expected. So better than expected, which is still so good. 201,000 of jobless claims versus 217,000 expected. So again, the labor market in the United States is improving. We can see also the PMI are improving. Manufacturing is positive, 51.5 in the United States, 51.4 the composite, and service 51.3. In the case of Europe, so weak numbers, but still the only ones that are improving is service, no manufacturing, but it's services. So services, PMI on services is improving. On manufacturing is still 42.3% on Germany, 46.8% on France, 46.1% on European area. So obviously not the best thing. In the case of United Kingdom, the PMIs actually this week on Thursday was actually good. So again, the expectation is at least European Union is the one who's facing certain troubles on the economy. United States is going well. The numbers in United States are still positive. So everything make me feel that money will flow to United States assets, to US assets, to dollar assets. That's why we believe the dollar gonna rise, as I showed you on the chart. And from the side of European Union, things seems to be a little bit better, but still the numbers in many different terms are bad. The growth rate is so flat, even negative in some cases. So therefore, things are not going well there. But United Kingdom still is surviving between United States and European Union. United Kingdom seems to be in a kind of middle point, showing still certain positive numbers. As you can see there, PMI composite is 53.3% versus 52.9%. Manufacturing is dropping, is weak again, is more, this is the European size, I will say, and services is still rising, is 54.3% versus 50.2%. So in the case of United Kingdom and United States, PMIs indicate expansion. In the case of European Union, PMIs indicate contraction. Still, regardless, the market in Europe is rising. Germany is dropping. Germany is actually giving a negative growth rate by minus 0.3% on Q4 the last year. Numbers are not good in Germany, but the market is rising. Okay, you can call it a magic trick. You can call it however you want. But the truth is, we can see that actually this is the movement of the market. It was a kind of shoulder head shoulder inverted on German index, which is moving now forward. Eventually, the target could go to 16,700 points, but I believe moving in this area of price, probably they're gonna try to find 18,000 points, and that's it. Take in consideration also that this is the top of a channel, and the top of the channel could finish soon in around 18,000 points, even before, whatever, and then turn the market down. So again, risk-reward ratio here is so negative. If the market twists at this point, we're gonna get much more points to lose than the points we got to win to the top of the channel. Okay, I think that's all. I think that's the most important things I would like to mention to you. Summarizing the week, a positive week in terms of equity, the effect of NVIDIA. The comments from Federal Reserve and BC are not so positive, but still they didn't depress the market because they are celebrating the party from NVIDIA. And we also comment the results and the certain values for energy sector and the prices of oil and Bitcoin and gold. Did we mention gold? No? If not, here you go. Here's the gold. If dollar is rising, gold is gonna keep flat, weak or lower, which means that's why I believe in a dollar moving forward to 108 points on DXY, and I believe a gold getting below $2,030 per ounce and start to move laterally on the channel to probably $1,850 per ounce. Okay, that's all. Enjoy the week, enjoy the market, and I wish you all the best. If you like this content, if you appreciate this material I bring into you, please don't forget to subscribe, give me a thumb up, and share this video with your friends. Take care. Bye bye.